Welcome back to the Daily Crypto Roundup. After a volatile few days that tested confidence across the market, today has felt noticeably different. Instead of sharp sell-offs or emotional spikes, we've seen the market slow down, absorb pressure, and stabilize. That doesn't erase the damage done earlier in the week, but it does tell us something important. The market isn't panicking, it's recalibrating. Bitcoin has spent most of today holding its range after a sharp dip earlier in the session that was quickly bought up. Ethereum has steadied just below $3,000. Altcoins are still mixed, but the pace of selling has slowed. This isn't euphoria, and it's not capitulation either. It's a pause, and pauses tend to matter. In today's episode, we're going to walk through what actually caused that dip and rebound, why Bitcoin remains the center of gravity right now, and then move through the most important crypto stories from today, staying focused on facts, developments, and what genuinely matters going into the new week. Before we do anything else, a quick reminder that we're running the XRP giveaway again. One comment will win 10 XRP, another will win 5 XRP. Leave your address in the comments when we reply to you, and we'll announce the winners Friday. Now let's anchor ourselves with where the market is right now. Bitcoin is trading at around $88,400, holding steady after earlier volatility. Ethereum is sitting just under $3,000, around $2,980. BNB is around $855. XRP is near $1.91. Solana is holding around $126. Tron is just under 30 cents. Dogecoin is hovering around 13 cents. Cardano is in the mid-30-cent range. Bitcoin Cash is near $590, and Polkadot is just under $1.85. That snapshot matters because it shows a market that has stopped accelerating downward. Price isn't breaking out, but it's also not collapsing. And that sets the tone for everything else we're about to talk about. Earlier today, Bitcoin saw a sudden dip that caught a lot of people off guard. What's important is that this move was widely explained by analysts and market coverage as mechanical rather than fundamental. There was no major negative crypto headline, no regulatory bombshell, no sudden failure. Instead, the dip was driven by liquidity conditions and positioning. During quieter trading hours, liquidity was thinner, and Bitcoin slipped below a short-term support level. That triggered stop losses, which automatically turned into market sell orders. At the same time, there was leveraged positioning sitting just beneath the market, and as price dropped, liquidations kicked in. This created a fast, exaggerated move lower. But what matters most is what happened next. There was no follow-through selling. Once the forced selling ended, buyers stepped in quickly, particularly spot buyers, and price snapped back into range. Analysts noted that Bitcoin briefly entered oversold territory on short-term indicators, and that dip buyers were waiting for exactly that kind of move. This pattern is consistent with a market that's range-bound rather than breaking down. In a true bearish trend, dips don't recover quickly. Here they did, and that tells us there's still demand underneath the market. Zooming out, Bitcoin continues to dominate attention and liquidity, and that's reflected in a broader trend highlighted today. Total crypto market capitalization has fallen to its lowest level in around 8 months. That sounds alarming until you look at where the money has gone. Capital hasn't disappeared, it's concentrated. Liquidity has rotated away from speculative, low-quality tokens and moved into Bitcoin and a handful of large, liquid assets. That's why Bitcoin can look stable while many altcoins still feel weak. This is selective risk-taking, not panic. This environment is also why rallies struggle to become breakouts. Participation is cautious. Confidence is rebuilding slowly, not flooding back all at once. Another factor helping stabilize today's session came from the macro side, particularly Japan. The Bank of Japan's long-awaited interest rate move removed a layer of uncertainty that had been hanging over global markets. Japan's ultra-loose policy has been a pillar of global liquidity for years, and once the decision was made, markets were able to reprice risk more calmly. That didn't spark a rally on its own, but it reduced anxiety. And reduced anxiety matters in a market that's trying to stabilize. We are going to pause here for a quick word from our sponsors. Stay with us. One additional story worth folding into today's roundup comes from the derivatives side of the market. where analysts are flagging a large concentration of open interest clustered just above current Bitcoin price levels. Data released today shows that a significant number of short-dated options and futures positions are sitting around the high $80,000 to low $90,000 range. What makes this important is not the direction itself, but the imbalance it creates. When open interest builds up in tight ranges like this, price movements can become exaggerated as positions are forced to unwind. Analysts noted that this dynamic likely contributed to today's sharp dip and rapid rebound. Once downside liquidity was cleared and weak leverage flushed out, there was very little resistance to price snapping back into range. Going into the new week, this positioning means Bitcoin may continue to experience fast, mechanical moves around key levels, even without major headlines, as derivatives markets, rather than spot conviction, temporarily dictate short-term price action. Looking ahead, analysts are also watching a large Bitcoin options expiry, scheduled for later this week. Options expiries can pull price toward key levels and amplify short-term volatility, especially when spot demand is cautious. This is another reason why we're seeing sharp intraday moves without sustained follow-through. The structure of the market is influencing price just as much as sentiment. From Bitcoin, we naturally move to Ethereum. Ethereum has spent today consolidating just under $3,000, a level that has become psychologically important. Buyers have defended the downside, but sellers continue to cap rallies. There's no sign of panic, but there's also no surge in conviction. This reflects a broader theme in today's news. Institutional interest hasn't vanished, but it's selective. Ethereum remains structurally important, but right now it's following Bitcoin rather than leading. That same caution is visible across the altcoin market, and one of the most telling data points today came from a report showing that around 85% of new tokens launched in 2025 are trading below their initial launch prices. That statistic answers a question a lot of people have been asking. Where did all the money go? The answer is simple. It didn't go everywhere. It went to fewer places. The market is no longer rewarding every new narrative or token launch. Liquidity is concentrating around assets with scale, credibility, and real usage. For speculative projects, that's been painful. But structurally, it's not unhealthy. It's a filtering process. On the positive side, there were still genuine catalysts today. Uniswap saw renewed attention as momentum built around its proposed 100 million token burn. Token burns aren't magic, but they do signal an attempt to align incentives and improve token economics. The market responded positively, and the token moved higher on the day. This kind of story matters because it's based on concrete mechanics, not hype. Another story that stood out today was security-related, and it's a reminder that risks haven't disappeared. A $50 million USDT theft was reported in an address poisoning attack. These attacks exploit user error rather than protocol flaws, tricking people into sending funds to lookalike addresses. It's not new, but the scale is significant, and it reinforces why operational security remains critical, especially in volatile markets. We also heard from one of the most recognizable voices in crypto. Vitalik Buterin commented today that prediction markets feel healthier than much of social media, highlighting their potential as tools for information discovery rather than noise amplification. Whether or not you agree, it's notable that builders continue thinking about real-world use cases rather than price alone. Regulatory and enforcement news also featured today, with multiple jurisdictions making progress behind the scenes. Reports highlighted fraud busts, settlement discussions, and renewed legislative efforts in different countries. None of these stories individually move the market, but collectively, they show that regulation is continuing, not collapsing, not accelerating wildly, but progressing unevenly. All of this brings us to the bigger picture. Today's session wasn't about a breakout or a breakdown. It was about absorption. The market took a hit, processed it, and stabilized. Bitcoin remains the anchor. Ethereum is steady, but capped. Altcoins are selective. Liquidity is cautious, but present. Going into the new week, the key questions aren't about hype or fear. They're about participation. Does volume return? Does Bitcoin hold its range? Does capital begin rotating outward again, or stay concentrated? For now, the most honest answer is that the market is deciding. And markets that decide quietly often surprise people later. That's where we'll leave it today. If you found this helpful, make sure you're following us, drop a comment for the XRP giveaway, and we'll keep tracking this market as it develops. As always, we will see you at the top.